Now, Life Healthcare's 2020 financial year was a tale of vastly different halves, as you can imagine. The group delivered an excellent performance during the first half of 2020, but trading was significantly impacted in the second half of the year, and that's because of the COVID-19 pandemic. And joining me now is Peter Wharton-Hood. He's the Life Healthcare Group CEO, to talk us through some of the numbers we saw in this particular period. Many thanks for your time this evening, Peter. Let's first talk about some of the salient features you saw in the second half of the year's numbers.
Certainly the second half can be described in one word as stressful, but it also has two extreme positives. One was the organizational resilience of our organization was demonstrated through the tenacity of our employees to continue delivering high quality care across the front line. And it was the first time that our clinical quality indicators, in actual fact, reflected an all-green scorecard, a remarkable achievement and due to the hard work of all our employees. From a revenue perspective, however, we saw revenues decline by 8.5% in the second 6 months to just short of 12 billion, and that was largely as a result of a decline in our paid patient days and occupancy levels over the 6-month period at or about 50%. There has been some improvement since May, as we have seen a start of a return to normal levels of volumes through our hospitals, and they've reached about 90% of the pre-COVID levels.
Right, and I'm glad you bring up the volumes of patients in your hospitals. Is it still for COVID-19 related treatments, or are you starting to see a pouring in of patients seeking various treatments since the lockdown or the hard lockdown was lifted?
Certainly, these are non-COVID patient-related volumes that I'm referring to.
Right. And let's talk about the outlook for the business, given what we're seeing with the current economic climate. You do say that you're cautiously optimistic, but certainly there's still going to be some challenges.
No doubt. And I think the caution is the next 90 to 120 days. We don't know what a wave 2 COVID pandemic would look like, where it will manifest itself and in what volume. And for that reason, we maintain our caution, and the way we manage our balance sheet and our cash liquidity will continue along those lines. The optimism is more in the medium term, a strong balance sheet, a good team, and growth opportunities domestically in the acute and complementary businesses, and internationally our diagnostic and imaging business has the chance to catch up with the pent-up demand for services. And of course, our life molecular imaging opportunities sitting primarily in the US may also come to fruition in the medium term.
Yeah, and I'm glad you bring up your international business, because I was wondering how your Southern Africa business as well as the international business contributed to the figures that we saw in this period.
Certainly, the COVID impact was largely absorbed by our South African business. We saw a decline in revenue in total at the group level of about 2.7 billion rand as a direct result of COVID. 2.2 of that was absorbed by the South African business and the other $500 million by the international business. So you can see they operate in different spaces with different business models, and the susceptibility to COVID-related challenges is obviously different across the two businesses.
All right, and of course, South Africa there being one of the ones that are more susceptible. Peter Wharton-Hood, that's all the time we have this evening. He's the Life Care Group Chief Executive, joining us to break down the numbers this evening.